think I know everybody who's on this call, but just in case I don't, my name's Alyssa Dyer. I'm the co-founder and owner of Table Investments. And so I have kind of been dealing with this beast that is all of these loans and whether they're forgivable or not forgivable. And I think I had called my executive assistant and my attorney probably like 15 times within like a 6-hour span the other day. And I was finally like, this is ridiculous. We should all jump on a Zoom call because we cannot be the only people that are kind of contending with this. So Danielle Durban, I call her, Danny, is our attorney, and she is brilliant. And she'll probably blush and tell me not to say all these nice things about her, but she truly is absolutely brilliant. She has saved our tail over and over and over again, saved us money over and over again, protected our clients. She's kind of taken on the role as, resident expert at her law firm for all the things that we're about to talk about. So I think the main thing that I've noticed whenever people are talking about this stuff is that there's the people who are, actually reading the law, and then there's the people who are, like writing blog posts about it and just trying to get through the day to day of what it means for their business. I'm definitely in the second category. Danielle is twisted and likes reading this stuff for fun. So she actually has read this thing start to finish. So there's that half of it. And then my executive assistant was kind of tasked with the monstrous role of, okay, here's all the stuff for Table, go apply. So I figured it might be helpful to have, Danny come in and talk about here's what the law says. And then Jordan kind of come in and be like, okay, day in and day out, here's what it actually looked like to kind of implement this in a business and actually go through the application process. So Danny's going to talk for maybe 10, 15 minutes. Jordan will follow up with kind of some practical stuff that helped her. And then from there, it's kind of just going to be Q&As for you guys until there aren't any more Q&As. Does that work? Sound right? Okay, cool. Danny, you're up.
Okay, so first of all, this is not very interesting material. So I apologize if I bore everybody with it. The way that Alyssa described it is I'm going to kind of do like a high level overview of these two different loan programs that the CARES Act has essentially come out with. And then after Jordan speaks and we open it up for Q&As, that's when I think we can kind of get into some more of the specifics and the nuances. So I'm going to go ahead and start first with this economic injury disaster loan. And that's the least reported about one, aside from the $10,000 grant that you might be hearing. But the eligibility requirements in order to get this economic injury loan is that your business has to have been in operation as of January 31st of this year. And then it also has to meet one of the following requirements. It either has no more than 500 employees. It is a small business, and there is a size chart that basically determines whether or not it is a small business. So certain industries, for example, the manufacturing industry, it'll give you a maximum number of employees or a maximum number of annual revenue. And in the manufacturing industry, the maximum number of employees could be 1,500. And so what I just stated about no more than 500 employees, that one might not apply to you, but this chart would give you more leniency as to if you fit into one of those higher maximum categories. So either no more than 500 employees, you fit into that small business size chart, or you are a private nonprofit organization. It can be, if you look at the language, confusing as to what that means, but basically, if you are a state registered nonprofit, you are going to meet that definition. One of the kind of caveats to the number of employees is if you have any other businesses, you're an investor in it, you own it 100%, what have you, to the extent that you control the business that you are applying for this loan for, and you're able to control one of these other businesses, you have to aggregate the number of employees in order to determine if it is under 500. So just kind of keep that affiliation analysis in mind. The actual terms of the loan, it's up to $2 million. There's going to be a maturity date of up to 30 years. If you are a for-profit business, it's a 3.75% interest rate. And if you are a nonprofit, it's a 2.75 interest rate. And we'll get into the Paycheck Protection Program, that's the 7A loan, in a second. But just note that if you have one of these loans outstanding and then you go to apply for this other loan, you can roll them into, or you can roll this one into the other one. So if you've determined that you're eligible for this economic injury loan based on kind of what we just discussed of being open on January 31st of this year, no more than 500 employees or the size chart, or you're a private nonprofit, then the way that the SBA, and that's the Small Business Administration, is going to determine the amount that you are able to receive, it's based on your actual economic injury. So once coronavirus started, and they're kind of saying that that was January 31st of this year, since then, what has been your economic injury due to the coronavirus? If you look at the actual application on the Small Business Administration's page, they're not going to ask you anything about this. This is something that once you start getting into the loan process, they are going to have an SBA loan officer, an SBA verifier talking with you through that in order to make that determination. So it's going to be unlike the other loan where you're going to have to provide a lot of that documentation up front. And then the uses of this loan, you can use it for payroll. You can use it for fixed debts or accounts payable. Basically, any obligation that cannot be paid as a result of the coronavirus. The only items that you are not able to use this loan for is refinancing debt or making payments on loans that are owed to another federal agency, any tax penalties, physical damages. I don't think anybody would necessarily have those. But if you think historically about these disaster loans, a lot of them have come after Katrina, where there have been physical damages, and that's a completely different loan. So you can't use the economic injury loan for physical damages. To the extent that you have stockholders, you also cannot use the proceeds of the loan to pay dividends to them. So the actual application process, it is on the SBA website. So it's sba.gov. And it's going to be administered through the SBA. This is different than the other loan, which is done through lenders. And the SBA is going to elect, most likely, to approve a borrower purely based on the business's credit score. They probably aren't going to require a tax return or any other forms, but they are allowed to. So just kind of keep that in mind. The idea is that they're really wanting to simplify this loan process. That's why they're kind of doing away with some of these requirements that have historically been in place. But they have left in that opportunity for the SBA to request those documents. And then also note that under this loan program, a personal guarantee is not going to be required if you get a loan for under $200,000. If you get a loan for over $200,000, then a personal guarantee may be required. So that's kind of the big picture of the economic injury loan. To get into the Paycheck Protection Program, I'm going to call that the PPP or the 7A. That's really the heart of the CARES Act. And when you hear about them talking about like the small business loan, this is the meatier section of that. And as far as the eligibility requirements for that loan, you're going to have to meet each of the following. So you're going to want to make sure that your business does not have more than 500 employees. And again, keep in mind that affiliation analysis. To the extent that you control another business, you're going to aggregate that number of employees. And they do make an exception for this 500 employee count, again, referring to that size chart. And the size chart is widely publicized. And Alyssa, I can always send the link to the extent it applies to anybody here so that you're easily able to access it. But again, if that size chart allows you a different maximum, then you don't have to worry about having more than 500 employees. But taking that idea, so you have no more than 500 employees unless the size chart allows otherwise. Your business was in operation as of February 15th of this year, and you had employees you are paying salaries and payroll taxes to. If you meet those three items, then you are going to be eligible for the PPP loan. One item that I do want to mention is, to the extent anyone has a nonprofit, the only nonprofits that are eligible for this loan are 501c3s or a 501c19, which has to do with veterans organizations. So the terms of this loan, you can get up to $10 million. To the extent that a portion or all of it is not forgiven, then there's going to be a 1% interest rate. And the maturity date of 2 years is going to start on the date that you apply for forgiveness of the loan. But you will have 6 months to defer payment. So payment of principal, interest, and fees. Everybody loves to talk about how they can get it forgiven. And so it's important to note that on the date that you receive the loan, you essentially have 8 weeks from that date to use the loan proceeds on allowable uses, and I'll discuss that in a moment, in order to have the entirety of the loan forgiven. So to the extent you don't use all of the loan proceeds in that initial 8 weeks after receiving the loan proceeds, then you're going to have to pay that amount back at that 1% interest rate and within 2 years. So the way that they determine the amount that you are able to get is they're going to look at your payroll costs, and they are going to multiply the payroll costs by 2.5. So the idea is that they're going to give you 2.5 months worth of loan proceeds to kind of pay towards any of the payroll costs. And I'll kind of discuss what all is included in that. And then if you recall from the economic injury loan, if you have that when you are applying for this PPP loan, you can then roll in that loan to this. So the maximum loan amount is going to be that payroll cost times 2.5 plus any outstanding amount that you have under the economic injury loan. You can then use, even though the loan amount is calculated based off of the payroll costs, you can use the loan proceeds for payroll costs, rent, utilities, or mortgage interest payments. It is important to note that it's mortgage interest payments. You cannot pay principal, you cannot prepay the mortgage. It's only mortgage interest payments. Additionally, the rent, the utilities, and that mortgage have to have been in place as of February 15th of this year. If you have a rent, a lease essentially that came into place after that date, then you could not use the loan proceeds towards payment of that rent. So you have the loan proceeds. You know you have 8 weeks to essentially spend all of it if you want it forgiven. There are a couple of caveats to that. One is that 75% of those loan proceeds have to go towards payroll costs. The other is that if you are reducing, like if you're laying off employees, or if you're reducing employees' salaries or wages by more than 25%, then they can take whatever amount you spent during that 8-week period on those allowable uses that you are saying is forgivable and reduce it because of the fact that you've laid off employees or because of the fact that you've decreased their salary or wages by more than 25%. There are some nuances there, and we can get into that during the questions. But if you correct either of those reductions, so if we think about it as two buckets of how we are able, or how I guess the lender or the SBA is able to reduce the amount of loan that is forgivable, there's the reduction in employees and there's the reduction in salary. If you have eliminated those reductions by June 30th of this year, then the entirety of your loan that was spent in that 8-week period is going to be deemed forgivable. As far as the actual application process, that is through lenders. That is not going to be through the SBA. And the application has gone through several changes. So to the extent that you have already started filling out an application, you may want to look at the one that was released today. But the nice thing about this application process is that there's going to be no personal guarantee and there's no collateral that is required. That is kind of the big picture of both loans. Like I said, very boring. I don't think it's going to get much more fun from here, except to the extent that we get to answer your specific questions. But I'm going to go ahead and hand it over to Jordan now, and then we can keep going with the rest.
I do have one question to ask you because I know there are a lot of individuals. As far as contract workers are concerned, I know you just kind of touched on that a little bit. I don't know how to phrase this. So they can apply for the loan, but obviously they're not going to have, most of them don't pay themselves out as salary. So is there something that they will be, I guess within like the document, is there something that they will specifically be asked to provide?
So for independent contractors?
Yes.
So that's probably going to depend on each of the different lenders. And this is something that's kind of been unfortunate about the process is, so when you do this economic injury loan, it's all done through the SBA. So the SBA is your lender. Right. And it's a very uniform process. What we're seeing with a lot of the 7A, the PPP loans, is that lenders, there are some that are extremely conservative and some that are aggressive in their approach. So to the extent that an independent contractor has not been taking out a salary, what we've typically advised clients is, because the way that they're going to determine this payroll cost, and remember, payroll costs has to do with the payment protection program and how they're going to determine your maximum loan amount. So they're going to look at your payroll costs, multiply it by 2.5. And they're going to look back at the last 12 months, essentially, to get that average monthly amount. If you haven't been paying yourself, you obviously don't have that monthly average amount. So what we've been advising clients is to speak with your lender about, to the extent that you are going to be taking salary, wages, compensation going forward, kind of show them what that's going to look like. It's obviously going to have to be a reasonable amount. You can't all of a sudden say, I want to pay myself $200,000 a month. That would be fun though. So I think it's a conversation that you have to have with your lender. The ones that are in the best position to have that conversation are ones who did eventually start paying themselves.
Mm-hmm. Which I think comes to kind of something that I've fallen into with a few different businesses that I work for. There are those that are more organized, and if you are the person that has everything set up in QuickBooks or another software, you're going to have a really easy time. You pull a P&L, like a P&L or a balance sheet, and it's pretty self-explanatory, and you don't have to do a lot of work. If you are that like sole proprietor, independent contractor, We got a question. Are we saving questions until the end, Alyssa?
Yeah, I'll keep track of them. That way you can kind of give your spiel and then I'll grab them. But Carrie, I see you. I'll totally flag it.
Hi, Carrie.
So what I've been advising people to do, and like Danny said, it really does depend on your specific lender. But I've kind of talked to a few, and the general consensus is I've been having people go through their expenses as well as their income, and which, like she said, don't be outrageous, but kind of weighing in, okay, how much was I spending versus my income, and taking a percentage of that. It will really vary depending on each business, but if you have to like do the grind and literally pull like all of your bank statements and pull like each individual thing, that's also an option. And I've had to do that for a company. So, I just think that if anyone can apply, like if you can apply, you should try to. And what she was saying as far as lenders being more conservative or more aggressive, Danny, I don't know if you touched on this, because this is something that we ran into. We have people that are contracted under us, and technically we pay them out as an independent contractor. And one thing that's really been a pain point with our lenders is like, do independent contractors count? And
yeah, that's a super fun one.
It is.
So this is kind of like the core of it is, so anybody who's kind of familiar with us, we have W-2 people who are, salaried and have health benefits. And then we've also got, people who are paid off of commission. So salespeople who, eat what they kill every day, and it kind of goes that way. So Jordan preps all of our packets and gets them sent over to the lender and is like, hey, per Danny, 1099 people count, and do this nice little email, and then the lender pushes back on Jordan. So it's this fun thing of, okay, so what do you do when you have your attorney in one hand saying, no, you're wrong, and the lender is saying, I don't care. One way I want you to, because we ran into that.
And unfortunately, in our case, so a lot of lenders too, if anyone has run into this yet, I don't know if people have started applying. There's bigger lenders, obviously, like Chase, which we personally bank with, that are only taking their customers, but also haven't opened up their application process really yet. So we fell into like, okay, do I keep waiting and I go with a lender that will probably just do what I say because it's digital and it's easy, or do I stick with this personal contact that I know, like I can guarantee I'm handing them the forms and they're going to file it and turn it in and they're checking the numbers. And I think for us in this moment, it was more worth it to like keep a personal contact and not wait, knowing that I don't know when Chase is going to open theirs, and I don't know if our application will be able to be submitted before they run out of money. So that's another thing that you do have to look at too. So could I have combated this lender? Of course, yes. And eventually probably got in my way, but also I'm looking at a time crunch. So you have to kind of decide what's worth more to you at this point in time. So that is an unfortunate practicality that we've run into. So, and also because I think their big thing is like, what portion will be forgiven. And I think they're also looking at how many people you're saying you have on payroll and then how many people that you're paying at the end. So that's another thing that I ran into with him as well. Was if they apply on their own and then we don't pay them and saved that for payroll for like later down the road, that portion wouldn't be forgiven. So it's just a mess. So those are kind of my pain points and my suggestions. I don't.
Okay, you ready for me to jump into questions?
Yeah.
Okay, cool. Okay, so Carrie asked, what if we only had employees for 3 months? Do you take an average of those months to determine payroll costs, or, multiply that by 4 for the whole? Does that make sense? So she had employees for 3 months out of the year.
Mm-hmm. So they're still going to be doing the average of the previous 12 months. That's a conversation, though, that I know, sad face. That's a conversation, though, that you should have with your lender. Oh, sorry.
I know that you should have.
Is that Siri?
Wow. No, that was me. And I know, yeah. Oh, Siri. Yeah. I thought you said it was that Carrie. But yeah, you should have that conversation with your lender. And again, it's going to be, I guess, kind of their appetite for risk, I guess. Are they going to be comfortable sending? So once you get to the loan forgiveness process, so you've received your loan proceeds, 8 weeks has gone by, you are going to be required to give documentation to your lender, basically showing that you've used the loan proceeds, 75% of it for payroll costs. And then you can obviously use more for payroll costs, but you can only use up to 25% for these other uses. So the rent, the utilities, and the mortgage interest payments. You're going to give documentation verifying all of that to your lender, and they have to basically decide whether or not, based on your documentation, that you are eligible for forgiveness, and then they send that to the SBA. So are they comfortable with your documentation? Yeah, it just kind of depends on the lender. So, but that is definitely something that I would bring up to them at when you're speaking with them.
So it's basically your lender that's going to be making this decision. So you really need to be thoughtful about what lender you're using. Like, hopefully you have a good relationship with them.
Exactly.
Okay. So that's really important, basically.
Yeah. Some lenders are more aggressive. We've been advising different, my firm has been advising different lenders across the country, and we have taken, I don't even think it's an aggressive approach. I just think if you read the CARES Act, this is what it says. But some guidelines and some regulations have come out since then that takes a more conservative approach, and that's really, I think, kind of scaring lenders.
Okay.
Wait, Carrie, did I interrupt you?
No, because someone else, I think, asked that question. Like, do you have a list of vendors?
That's what I was going to say. Gordon, I promise I'll come back to your question, but Jason had asked, do you guys have recommended lenders that are aggressive and will allow the 1099s to count? I'm in that same boat right now. My knee jerk is that it's probably going to be the bigger lenders who are more compliance concerned. Like Chase is going to be way more worried about compliance than, whatever local bank that I'm using around the corner. Danny, confirm, deny?
Okay. I think that's like an interesting take, because we have kind of experienced the opposite.
Ooh,
so the smaller lenders that we have been advising have almost not even wanted to be involved in this program. But the larger lenders, especially the ones that have an existing relationship with the SBA, because they have an existing relationship, feel like they kind of have a working knowledge of what's going to be acceptable, what the SBA is going to approve, etc. And so they've been more comfortable with taking an aggressive approach.
Oh, yeah. Okay, yeah. That's what I meant. I'm so sorry if it was confusing.
No. You are perfect.
Because it seems like from what I've seen, we probably would have been better off to go with Chase in theory if I were willing to deal with the long lines and
right.
It's the fact that they haven't even, I've checked every day and it's just, sorry.
Yeah.
Right.
We're not accepting applications yet, which then,
And to Jordan's point earlier, what we're hearing from every size lender is that first they're going to give priority to their existing customers that are actually in need. Then it's going to be other existing customers. And some aren't going past that. It's just existing customers. To the extent anybody does go past that, they're going to open it up to people who have not banked with them before.
Does that make sense? Answer your question, Jason? I think so. Okay, so I think this question is probably going to be a common one for a lot of people on. I know a lot of people who are landlords with us are on here. So the question is, within EIDL, is the $10,000 automatically forgiven? Within EIDL, we won't know our losses until our renters do not pay their rent. How should we apply for a loan if we don't, if we don't know our losses now or what they might be? What is this kind of gray area for people who, I just have an LLC to buy property in, I don't have any staff, I don't have employees, but I for sure have renters who are, maybe wait staff and the restaurant's shut and we have no idea when they're going to be back to work.
Right. So yeah. So with the economic injury loan, you have until December 31st of this year to apply. So that gives you plenty of time to actually experience those losses that you're contemplating. With regard to the $10,000 grant, what's interesting about that is, so you go through the economic injury loan process on the SBA website. And the very last page, you can click a box that says you want the $10,000 grant. It has you fill in bank information, and within 3 days, the $10,000 is supposed to appear, which I think sounds magical. And the issue with that is, so let's say you click apply, and then you are later denied for the economic injury loan. That is great. Well, it's not great. You obviously want the loan, but you don't have to pay back the $10,000 even if you are denied the economic injury loan. So that's the part that I think is fabulous. But let's say you then want to apply for the PPP loan, so this 7A loan. Once you apply for that, and assuming that you got the $10,000 grant, that $10,000 is not going to be included in your forgivable amount. Something that we've been advising clients that want to do both is to not check the $10,000 box to the extent that they are able to wait. That way they can have the totality of it if used within that 8-week period for those allowable uses. They can have the totality forgiven.
Okay, cool. For the 10K EIDL grant, do you know how much your credit score will affect getting the money, and what is the minimum credit score, if any?
So I don't know the minimum credit score, but when you are applying and you go to check that box, they are relying on you self-certifying. Granted, I want to caveat this with it's under penalty of perjury, but you self-certifying that you meet one of those eligibility requirements. So to the extent you actually do meet one of those eligibility requirements and you check the 10,000 and then are later denied because of your credit score, I think you've made a good faith certification that you were eligible and you would still get the $10,000 and not have to repay it. Did that answer the question?
So I'll keep a look in the chat. So is the $10,000? So the $10,000 is totally a grant, regardless of acceptance or denial of more loan. True or false?
Correct. Okay, so this is a very lawyer answer. It depends. So if you're only going after the economic injury loan, true. But to the extent you roll that economic injury loan into the Paycheck Protection Program, that 7A loan, then the $10,000 is going to be excluded from forgiveness, from the forgivable amount. So you would have to pay that back. Granted, the Paycheck Protection Program has that 1% interest rate. So $10,000 at 1%, I think, is a very good deal.
Okay. Do you guys have more questions? For the economic injury loan, that's business in operation as of January 31st and includes businesses incorporated afterwards, or no?
No. So you have to have been, the borrower has to have been in business as of January 31st of this year. And And that it makes sense why, because it's an economic injury loan. If you weren't in business as of January 31st, then I mean, I guess the economic injury is still going on, but the idea is that you had some sort of business beforehand where you were bringing in revenue and you can show that loss due to the coronavirus.
Okay, so so how does that store? Okay, yeah. So my brain just went to like 5 different things, and then her question validated one of them. So storefronts that just opened up, how does that apply? Like brick and mortar, I've spent 6 months working on this, like, cute shop. I finally get it open February 12th. Just SOL.
Well, I would think that if it opened February 12th and you were working on it for 6 months, had you not formed a legal entity by then? I know this.
Yeah, so I guess it would probably, I mean, if you've got to open up shop by, February, you had to have had something formed.
Right. And that's what they're going to be looking at. Mm-hmm.
Oh my gosh, so funny. People saying I filled out the $10,000 last Tuesday and haven't heard anything back. Definitely didn't get the magical deposit.
Oh, well, I think I'm hearing that there's like a delay, and actually that the SBA, so the PPP program opened up last Friday. And what we're hearing from some of our lenders is that the SBA has kind of issued down guidance saying do not lend anything right now. Why? I think it's probably because they need to issue further guidance, but it's just interesting that they opened up the program, but then are telling lenders not to disperse funds.
Yeah. Okay, so what does it look like? Because I feel like there are probably a lot of people on the call in this situation. I have an LLC. I have a business. My business probably brings in like less than $70,000 a year. Like, I'm not some crazy heavy hitter. I'm first 1 or 2 years, either I just own rental property or my business is brand new. Do I go ahead and apply for the PPP even though I don't have employees, but I am a business? Or no, because I don't really have any payroll. I just have, I think there's a lot of people probably on the call who are in that little gray area.
Right.
Like, I'm that person and I'm, Danny, what are, I guess, the next steps, or some framework around that?
Yeah. So I think it kind of goes to this idea of why was the CARES Act implemented, specifically the Paycheck Protection Program. And I think it says it right there in the name, the Paycheck Protection Program. So we are trying to basically use employers as a conduit to get money to individuals. And so to the extent that you don't have employees, that, yes, it puts you in a difficult position. I would not be surprised if other types of funding programs come out to address those types of individuals. There are certainly programs for medium-sized businesses, for example, that go over the 500 employees that is contemplated in the CARES Act. But I think, would they be able to apply for the economic injury loan? Or do you think that because it's more of an investment that they don't have,
I know
sustained?
So kind of two different crowds. Like, we've got women in business who are going to be more like lots of storefronts, lots of like sales, whatever. And then, but most of my people who are on here are going to be like landlords who are chilling in New York, can't go to work, everything's on lockdown, and then they're getting emails from me that's like, your tenant can't pay rent, and they're like, well, I definitely have some damages, but I don't have payroll. Do I need to be looking at other forms of relief, or does this kind of apply to me?
Yeah. So I would definitely recommend the economic injury loan for those individuals, because it's not at all based on payroll. That's purely based on your economic injury. And so it sounds like
maybe startup companies that maybe you will have employees, you're just not there yet, right?
Right. And keep in mind, if you are paying yourself, even as a 1099 or maybe as an employee, then maybe you can look at the Paycheck Protection Program.
Sorry, we had missed a question previously from Gordon.
I'm so sorry.
Oh, no, you're fine. Oh, wait. Did someone ask when can we apply if we don't have any employees, or did I just read that incorrectly?
I didn't see it, but that definitely doesn't mean it doesn't exist.
I know too that I personally have a lot of friends that are more freelance workers and have businesses like that where it's just them on their own. And it's hard because I know that this was in place for employees and to keep us from overloading unemployment. But then they're also not eligible for unemployment because they're a freelance worker. So would you still advise them to try to apply if they can? It's going to be obviously a little more work because they're going to have to pull bank statements or try to figure out what they're paying themselves. But
right. Yeah. So it's interesting. I've followed the CARES Act since kind of its first iteration. And in the last iteration, so the one that was actually signed 2 Fridays ago, they did specifically call out that these sole proprietors, independent contractors, they are eligible for the Paycheck Protection Program. So they can definitely apply. They're just going to have to make sure that they have documentation that they can give to a lender to show basically their payroll costs.
Okay.
Ooh, so this is actually a really good question. So for all the people like salespeople who don't get paid to an LLC, makeup artists who never really got around to making an LLC, landlords who own their properties in their personal name. So do you have to have a legal entity, or is that not necessarily a requirement here?
So that is not a requirement, and that's the idea of being a sole proprietor, essentially, is that you don't have to have a legal entity. It's almost like the tax liability and everything passes through to you.
Yeah, that makes sense.
And
that's a really good question. Oh, go ahead.
I was going to say, but if you are a sole proprietor, you cannot apply until the 10th.
Correct.
Good point. I keep reading that. What if somebody changed their DBA to a different legal name after January 31st? Are they still?
So I'm going to ask whoever asked this question a follow-up question. So the DBA is doing business. It should not be changing your actual legal entity name. Did they change their legal entity name, or literally just the name that they do business under? And I could give an example if that would be helpful. Like if I were Danielle Durban LLC, but I did business under the Lady Lawyer. I don't, but that'd be cool.
Like your trade name.
Exactly.
Can you guys hear me?
Yeah. Yes. Hi, Evelyn.
Okay, hi. Okay, so this is what happens with us. We have our online retail, which is Dirt Direct Off-Road, and that was under the LLC of Divine Dirt. And then we legally changed it after January 31st. So we are now Bolt Wrench Inc. doing business as Dirt Direct Off-Road. So are we still able to qualify?
Yeah. So I don't know. Your lender's probably going to want documentation showing that, but you should be fine.
Okay, cool. Thank you, girls.
You are welcome.
What are Danielle? You're gonna laugh. I asked Danielle this question, like I think 18 different versions of this question. Like, Alyssa, it's not that hard. Actually, she would never say that. She was just like, well, she said, so what are payroll costs? Does it include federal, state, local, just bonuses?
Okay.
Mileage?
So get your pen and papers ready. No. So payroll costs, let's think of it like a grocery list. And I'm going to kind of run through each item, and you can include everything, or you can kind of pick and choose. So payroll cost is going to include salary, wages, commissions, or any sort of similar compensation. Let's say you own a restaurant and you have employees that maybe make under minimum wage, but with tips, they make more than that. So you can include those those cash tip payments or kind of any equivalent of that. If the borrower pays employees vacation, family, medical, or sick leave, you can include those costs. Group health care, that includes insurance premiums. You can also include retirement benefits, and then state or local taxes. What you cannot include, though, are federal taxes. And you have to be careful because to the extent the employee makes more than $100,000 in a year, you are capped at $100,000. So if somebody makes $200,000, you can only count up to $100,000 for purposes of calculating payroll costs. I think this is a good time to maybe mention the independent contractor debate, I guess is what we'll call it. So us legal scholars, we believe that independent contractor costs are included in payroll costs.
It clearly says that in the document.
Yes. It's like a plain reading. I get to be creative every day for legal arguments for my job, and this required no creativity whatsoever. It literally says payroll cost means, and then you kind of go through salary, wages, and then it says, and the sum of payments of any compensation to or income of a sole proprietor or independent contractor. I think it's very clear, but that's just me, apparently. So that's where you might want to kind of push back on your lender to the extent it makes a huge difference in what you can calculate in terms of your payroll costs. Keep in mind, though, that this does not mean a vendor. This is truly an independent contractor, their costs that you can include.
And the reason that, like in our circumstance, that we were not able to include that, though, is that if they are an independent contractor and they are also filing on their own, and we technically, like if they were to make a commission, we are not, since they are not making a commission, we are not paying them that money. So then we would have just had extra money that would have not been the forgivable portion of the loan. So that is why our lender pushed back so hard on it. But that's just in our case because it's all commission based.
Yeah. I feel like the lender, though, should allow you to choose, because to the extent you don't use the compensation for an independent contractor, you could use it towards hiring another employee. Like the idea is that this money is fungible for purposes of who you're paying these payroll costs to. It doesn't have to be the exact same individuals that you've had. To the extent somebody is making more money by filing unemployment and they don't want to come back, then you can use the payroll cost to hire another employee.
Right.
I've actually had a couple people either text or in the chat something along the lines of unemployment. So like this is probably the most articulately worded. For the PPP, I imagine that a lot of my employees will make more on unemployment plus the $600 per week than as an employee. I fear that I will not be able to entice my furloughed employees back to work until the June 30th end of the $600 per week. Therefore, our payroll will be less than 75% of the loan. Thoughts, suggestions?
Yeah, so this is a very tricky one because what I'm about to suggest, I think, is bad from a PR perspective, but it's really your only kind of recourse. So the way that filing for unemployment works is that the employee that is filing for unemployment essentially does not have the means to have a job. Like it's just not available. And so when you are telling this employee, hey, you do have a job, come back, and they're like, no, I'm making more money by filing unemployment, you can contest their unemployment. And that is, and some employers have taken this advice, but the threat of contesting their unemployment, so the fact that they'd get nothing, is enticing those employees to at least accept that job back. I don't practice in employment law, and so we do have attorneys at our firm that are much more well-versed in this. My understanding is that what they are getting from unemployment, and please don't quote me on this because I don't actually have a deep knowledge of this, but it's not, I think it only lasts for a period of about 10 weeks. So it's possible that you could consider pushing out when you want to get the funding from the loan. The issue then obviously is that they've basically said that this is first come, first serve. So if they're out of the loan proceeds by that date, then you are out of luck. Unless they do a phase 4, essentially, which I think a lot of people are thinking that they will.
Sole proprietors can't apply until the 10th. What if we already did? There was nothing in the online application about the 10th.
Not for the EIDL, only for the PPP.
Okay. Cool. I'm going to run through this one super fast. Sorry if this was covered and I missed it. I'm a sole proprietor. Is the EIDL forgivable? Specifically, I'm a landlord with no employees or contractors. I want to file for the EIDL due to loss of rent. Do I need to wait until I actually lose rent money, or can it be something I file anticipating this? What did you say the date was? December
31st of this year.
Okay. So you've got until December 31st to kind of pull the trigger on that one way or the other. So you can wait, see what your losses are, then do it then. Yes?
Yeah. Yes. But I will say it's not forgivable. That loan, the economic injury loan, is not forgivable unless you're rolling it into that Paycheck Protection Program.
Danny, correct me if I'm wrong, but a sole proprietor cannot apply for the EIDL. It has to be an actual LLC or a business, correct?
I believe so. I have heard, though, that lenders are more willing to be lenient with that, I guess. So I don't think it necessarily hurts to apply. But yeah, you may get pushback because of that.
She was asking about the EIDL.
Yes, not the PPP.
I thought the EIDL is coming from the SBA, so there's no lenders involved.
Oh, I'm sorry. There's still going to be loan officers. So the loan officers, it's just the loan officers work for the SBA. So we have heard from SBA loan officers that they are being more lenient than they normally would. So to the extent that they have an issue with it, a lot of the way that the economic injury process is going to work is the borrower communicating with this loan officer. So you from the SBA. So you really have that chance to, I guess, plead your case.
Does that help, Danielle? Perfect.
Yeah, I'm so confused because I was the one that asked that question about the LLC, the legal entity earlier, and it sounds like just now you said that it's either preferential or you have to have a legal entity. So at the end of the day, is a legal entity a must, or for the EIDL specifically?
Okay, so when we were talking about it earlier, that was under the Paycheck Protection Program, where they opened it up to sole proprietors, so where you did not have to have that legal entity. Under the economic injury, that's where you might have more of a problem. And so I don't think that they're going to give you pushback just because of how lenient we've heard that they are going to be, but it is possible that they might. But I think it's still worth applying.
Gotcha. Thank you.
What about independent contractors who have already filed for unemployment? Is that going to be a conflict?
Yes. You cannot do both.
Cool. So if you have an LLC that is an S Corp, you do not have yourself on payroll and you do not have any employees. Should you? So there's going to be a lot of people on the call who have that. I was in that bucket for a really long time. Do you go ahead and apply? Because forever,
Right.
I mean, I would take my owner distributions. I just didn't have myself on payroll because I didn't want to Like
Right.
I was in a grade where I hadn't hired yet.
And I think so. Under payroll costs, they're defining it as salary, wages, or similar compensation. And so, to the extent you're taking some sort of compensation, be it dividends, distributions, what have you, I think you can, as long as you can show that, I would still apply, and that would be the documentation that I would use to show payroll costs.
Cool. Do you guys have any other questions? These have all been so good. I don't know if they're what I expected, but good nonetheless. Okay, is there anything? So I want to ask this if nobody else is going to. I mean, I have a lot of, obviously, like with my business, a lot of landlords who are asking me like, what's up? Like, what the heck are we going to do? Like, we're not businesses. I mean, my people with Section 8 and like VA contracts are, pretty killer, but we've got several people who are, bartenders who are going to be out of work for 8, 9, 10 weeks that have more student loans than savings. And do you think they'll do some type of like, and I may be way out of your depth, but some type of relief for homeowners, and I'm really going to put you on the spot now, like forbearance, like what conversation should those people be having, I guess?
So are you thinking of like forbearance in terms of the landlord with their lender or the lender?
Okay, so let's pretend like I am like 35, I've got a good job and I make good money. I've got 10 houses, so I've got 10 mortgages that are all rental houses. And I've got 8 of those where my tenants are suddenly not paying rent. And I've got enough money in savings for my family to live off of like 3 months because I'm pretty smart with money. But at the end of those 3 months, I'm going to have a hard time paying my personal mortgage. And I've got 8 mortgages with tenants in them that I've got a real hard time paying. I'm an employee, so I don't have a S Corp LLC, like,
Right.
Is there anybody coming in to save my day, or am I just, one of the statistics that's really going to be in a tough spot in several months?
Right. So I think,
I know I'm putting you on the spot.
No, it's fine. I'm just trying to think through. Are we also going to assume that the state or states where these rental properties aren't allowing you to kick out the tenants?
Yeah.
Okay. Sheriffs,
what they're all saying, nah, you got to let them stay at least for 60, probably maybe 90 days.
Right. So, I mean, I don't know obviously what Congress is going to do, but let's put aside any potential relief that they might come out with and discuss kind of like right now the practical things that you could be doing. I think you could talk to your lender. I'd be very careful about any sort of forbearance agreement that they give to you, and make sure it's not especially favorable to them, because that's often what forbearance agreements are going to do. Is it's taking the terms of the loan and obviously giving you time before you're paying on it again, but because of that, they're going to make the terms even more favorable to them. So you could look at that option, or to the extent that you are getting some kind of income from your employer, I might look at entering into some form of forbearance with your tenants and allowing them to defer payment until a specific date, and then maybe amortize their whatever that time period is that they're missing for rent payments over the rest of the period of their lease. There are ways that I feel like you could be creative about it. But yeah, I think right now you're just kind of in a tough spot. And that's not fun to say. But I also think that the more that we hear about the CARES Act and how it's operating, it's also highlighting all those individuals who it's not benefiting.
Isn't the EIDL open to homeowners and renters as well?
So that is under a different economic injury, under a different disaster loan.
Okay.
And that has to do a lot more with like property damage.
Okay.
And can I say something to, I think it was Daniel that asked the question earlier. I did pull up the 7B, so the economic injury application, and they are allowing sole proprietors or independent contractors to apply. So it's explicit that they're allowing that. You don't have to have a legal entity for either program. Confirmed.
Thank you.
Yes, you're welcome.
Small note, most mortgage bankers are allowing deferrals of mortgage payments or forbearance, and it looks like most of them have it on their homepage for relief, which is actually good to know.
Awesome. That is.
Okay. Does anybody else have any questions before we wrap up? I mean, we've got a couple more minutes if anybody does, but if not, I'll kind of let Danielle and Jordan wrap up and get off here. I'm sure your email is going crazy. Okay.
Hey, Alyssa, I want to thank you for organizing this and the one that you did last week. I think these have all been great, and you guys have been a fountain of knowledge, and I really appreciate it. Thank you.
Dude, yeah, oh my gosh, thank you. Danielle really is super amazing. If anybody has ever asked me for a referral for an attorney, I always send her out. I've had a couple people text me just since we've been on here. I just got one text, OMG, I need a one-on-one with her to discuss this. Can you send me your contact info? I love her. What is your contact? I've had 3 or 4 people send me some version of that text. How do people, if they want to call you and do some type of consult, what is that? One, what can your firm actually help with? What are you not going to be able to help with? And then what's kind of the best way to get a hold of you?
Yeah. So our firm, we basically do everything except for criminal law. So don't murder somebody, and we'll be able to help you. And as far as the SBA goes, we are able to help. We've been advising a lot of clients already all over the country with regards to it. The main thing that we have been seeing and that we like to do is, to the extent that you have an accountant, we like to work with them just because they're going to know your numbers and your books. But if you want to talk more about it, it's kind of, okay, I'll let everybody write it down. My email is Durban. So it shows my name on the screen. So D as in dog, U-R, B as in boy, A, N as in Nancy. And then it's at Cape Sokol. So that's C as in cat, A, P as in Paul, E, S, S, O, K, O, L as in Larry.com. And you can also go to capesokol.com just to kind of see an overview of all of our attorneys, the areas that we practice. It's a great firm. We enjoy working with each other, and we enjoy the work that we do and the clients that we work with. So I'd be happy to speak with any of you.
Danielle, if you call her and have a question, she'll be like, oh, you don't need to hire me for this. You just need to read a Google article. So she really, it is super, super honest. Which I appreciate. And I dropped your email and then the website for your firm in the chat. I think everybody can see that. I'm not the Zoom expert. Did anybody not ask a question that you think they should have, Jordan or Danielle? Is there anything that we should have?
That's good. Let me see.
I do have, so if a sole proprietor can apply for the EIDL and opt for the $10,000, even if they don't qualify for the loan, then should they? As long as they can prove income and paying their something.
Yeah. So I think that kind of gets into almost an ethical answer, and we've dealt with it with a lot of, so do you need it? And to the extent that you don't need it, it is available. I mean, you know what I'm saying? So if you need it, then yes, I see no harm. If you don't need it, I'm going to leave that up to you. The one thing that I do want to say, and it actually relates to the $10,000, this is kind of what I was thinking of. So it's interesting. The $10,000 funds do have to be used for specific things. So they can be used for maintaining payroll to retain employees. They can be used to pay sick leaves due to employees being unable to work because of COVID-19. They can use it to make rent or mortgage payments or repaying obligations that cannot be met due to revenue loss. I think that last one really opens up the net for what you can use it for. But I think also just being aware that it's not something that you can go and like spend on getting a car or a purse.
To that, I was going to say as well. So for everything that you put in your payroll cost when you're submitting for your PPP, even if it's life insurance or anything that would be considered an employee benefit, you do also have to supply some kind of documentation for that as well if you've included it in your total cost. I just want to preface that for everyone and to try to be as prepared as possible so that as soon as you start the process, it's quick and easy. So yeah, any documentation showing payroll cost, employee benefits, and also proof of your business. And then if you have a CPA and you have your quarterly 941s, that's also been something that they've been referencing for your loan. That is what the majority of the lenders that I've talked to, but like Danny said, it will vary from person to person. But they've been averaging out your quarterly 941s. So if you are a bigger business and you have those, that will be a lot more time efficient for you.
Cool. Oh, a couple, is workers' comp considered payroll costs for the PPP allowable for given loans?
I don't think so. It doesn't explicitly say one way or the other, but to the extent it's something that's taxed at the state level, you could try and toss that in and then kind of see what your lender has to say.
Okay, and then did we mention at all, I don't remember if we did, expected turnaround time on the PPP loan once approved? Does anybody know that?
Well,
Alleged or real?
Well, I thought that $10,000 was to show up within 3 days, and I was apparently wrong about that. But that is what they were advertising. So what I think they're saying is eventually they want to be able to have these PPP loans same day. But again, what we are hearing from lenders is that even though they have had applications as of Friday, they've been working over the weekend with them, that they're not dispersing the funds until the SBA is giving the okay. And that's different than what we had heard before. And that's as of this afternoon. So I guess
you have the 8 weeks from the day you receive it to spend it.
Yes.
And not the day you applied. That's where I was getting
correct.
confused.
Yes. The day that you receive it.
The maturity rate is based on the day you applied.
For loan forgiveness.
Okay.
Yes.
Cool. Well, thank you so much for taking time to do this for us. It was so helpful.
Oh my gosh. I loved it. I loved being able to do something with and for Alyssa. And then Alyssa also, I feel like adores Jordan and everything that she's done for Table. So it was an honor to do this with both of you.
Yeah, dude. Okay. If you guys have any questions, of course, you're always, welcome to message me or email me. And then I dropped Danny's email right there. And then I recorded this. So if you guys have any friends that would benefit from learning all of this, just send me a message and I can totally send you the link for it. Okay. Bye, guys. Everybody have a good night. See you soon.
Thanks, Alyssa. Thanks, Danny. Thanks, Jordan.
Yeah.
Thanks, everybody.
Thanks.
Thank you all.
Bye.